Okay, Dobbin, thank you. I appreciate it. I was muted. Anyway, I was just expressing that I love that intro because I'm a big movie fan, and that intro makes me feel like I'm hosting an IMAX experience too. So we're gonna dive in here in a few minutes, but I know how these webinars are, and I know that people typically jump in within the first few minutes, and so I don't want anybody to miss anything with this webinar. So we'll dive in here in a few minutes, but before we dive in, let me know here in the chat where you're joining me from. So let me know what state or even country that you're joining me from in the comments. And also, I know a few of you said you couldn't hear, and I believe it's because I was muted, but I just want to double check. Let me know that you can hear me loud and clear as well by letting me know here in the chat too. So let me know, and let me know where you're joining me from as well. All right, where are you joining me from? Let me know here in the comments. Good old Georgia, the Peach State. I have some family in Georgia. Of course, I already knew that about you, Dobbin. So, but thank you though. I appreciate it, man. It's good to see you on here though. All right, Ryan. Uh, let me know if you can hear me loud and clear. I know you said at one point there was no audio. Gary, thank you for chiming in. Thank you for joining from Maryland as well. I actually just came from your area. I was in New York City until Wednesday, from Sunday to Wednesday for a business event on Monday. I love New York City, and I still have yet to really explore the Northeast. To be quite honest, I haven't gone past New York City. I still have Maryland to explore. You know, Vermont, New Hampshire, Rhode Island, Boston. You know, I definitely want to check out Boston. So, okay, good. Audio's coming in great. Okay, awesome. Sounds good. All right. If you're just joining, let me know where you're joining from, what state, what country you're from. Just let me know here in the comments. We're about to dive into today's content. All right, all right, all right. All right, guys. Well, we're going to dive in. So let me go ahead and share my screen. Give me a thumbs up when you could see my presentation that I'm about to share. Just want to make sure that everybody can see it. Okay. Okay, give me a thumbs up that you can see my screen. You can see my presentation. Sharing it right now. All right. Can you guys see the presentation on screen? Just give me a quick thumbs up. Just want to make sure everybody's with me. Okay, thumbs up, guys. Thumbs up. Can you see my presentation? Let me know. All right. Awesome. Thank you, guys. Appreciate it. Cool, cool. Got some thumbs ups. Okay, perfect. All right. Well, let's dive in, guys. So today's presentation is going to be about how to earn passive income from a 2.5 million a year hyperbaric oxygen therapy brand. And this is a private investor webinar, which will reveal how anyone can use the same private equity investing strategies that the ultra wealthy use to build wealth. Now, while we're going through this presentation, I recommend that you're completely present, like the best student you could possibly be. You know, you eliminate distractions, you put your phone aside, turn it off even maybe, or put it at least upside down, and just really laser focus on this because this could be a big opportunity for you. So before we dive in, this is our investment disclaimer. So I'm going to read this because I have to. ARM5 Formula Company is conducting this capital raise pursuant to both Regulation Crowdfunding, which is Reg CDF, and Regulation D, which is Reg D, under the Securities Act of 1933 as amended. Certain offerings may be available to accredited investors under Regulation D. ARM5 Formula Company's Form D filing with the U.S. Securities and Exchange Commission can be reviewed here. I know you can't click on the link, but if you just go to the SEC Edgar database, type in ARM5 or ARM5 formula, you could pull it up very quickly. Investments in private companies are speculative and involve a high degree of risk. These securities are restricted and subject to limitations on resale. There is no guarantee of liquidity, profitability, or return of capital. Past performance is not indicative of future results. Prospective investors should carefully review all offering materials, disclosures, and risk factors before making any investment decision, and consult with a licensed financial advisor, attorney, or tax professional if needed. As with any early stage investment, there are risks involved, including the potential loss of principal. Invest only if you can afford to lose your entire investment. Please review all offering materials carefully and invest in alignment with your overall financial plan. Okay, so this is who this investment opportunity is designed for. So it's designed for the strategic investor. This is an accredited or growth-oriented capital allocator seeking asymmetric upside. And that means basically, minimal investment, high upside. That's what that means if you didn't know. This is someone that wants to add private equity exposure beyond public markets and traditional assets. They also want potential access to early stage valuation before institutional capital, which is what this is. And, it's a very exciting opportunity, if I don't say so myself. Opportunity for equity growth alongside scalable AI and e-commerce infrastructure, and position for long-term value creation, not short-term speculation. This is also for the retiree, focused on stability and legacy, individuals seeking income protection and generational impact, exposure to innovation without needing to build or manage businesses personally, diversification beyond market correlated assets. This is where you have investments that perform regardless of the stock market or government policies and the real estate market, et cetera, et cetera. Opportunities to align capital with long-term growth sectors, which e-commerce is one of those sectors that is growing and shows continued growth over the next 5+ years and beyond. Also, ability to participate in building a legacy asset for family and future generations. This could be that for you. This is also for the ambitious working professional, high income earners looking to accelerate wealth beyond just their own salary. This converts earned income into ownership in scalable digital infrastructure. Also, there's potential upside not tied to job security or employer performance. This is also an opportunity for access to growth sectors like agentic AI and also e-commerce. And then on top of that too, this allows you to move from trading time for money by owning leveraged assets, which everybody, whether you are a strategic investor, a retiree, or a ambitious working professional, you should be working towards creating assets that create more leverage for your capital. Okay, so different starting points, but one shared objective: strategic equity in a scalable, AI-powered, award-winning e-commerce aggregator. I'll keep this brief, but I definitely want to introduce you to me and my company. So let me give you a little bit of background here. So I am a U.S. Army veteran. I served from 2001 to 2005. I'm also an MBA graduate. I finished my MBA in 2013, my first year of business. I'm also an international best-selling author in e-commerce. You can go to Amazon, type in my name, and you can find my previous 2 books that I've published. I've had 19 e-commerce business acquisitions since 2022. I've impacted thousands of e-com businesses since 2013 through online events, coaching, and client services. I've also had over 100 million in online sales through my work. I've also been seen or heard on Forbes and also other local media outlets around the United States and the world even. Superfast Business, Entrepreneurs on Fire, Big Commerce, Forbes, and various other popular online media. So I'll tell you my story again in a nutshell. I don't want to waste a whole lot of time here. I really want to dive into the content. But I also want this to be an opportunity for you to get to know me a bit. So I got started in basically late 2012. So late 2012, I had been at this software company called Infusionsoft, now called Keep. And I switched to that company early in 2012 after 7 years in a corporate career where I was very successful, where I was winning awards. I was making nearly 6 figures a year, which was a good bar at the time. We're talking, from 2005 to 2012. And I didn't have any background in business and e-commerce. But working at that software company opened up my eyes. And I was talking to business owners, I was selling them software, and I was learning what they were doing to make money online. And then at the end of that year, 2012, they fired me. I was surprised because I was at 108% to quota for the year. But it was just because there was some friction between my manager and myself because I had a background in management at my previous career where I was a manager for 4 out of the 7 years in corporate America. And I could tell there was friction. And so right after he fired me, I started selling freelance services. And this was the first time I was really making a decent amount of money on my own. I wasn't making a lot. I wasn't making enough to cover all of my bills, but it was that initial early traction. And then a few months later, I did accept another job at a business B2B sales position at a company that was selling IT products and services in the Phoenix area. And I told them right away that I had a 3-year-old son. He was 3 at the time. He's now 16, almost 17. And I told them that I needed to leave to pick up my son from preschool 1 to 3 days a week. And they gave me a hard time about it. They said that this is a work hard, play hard culture. You have to work 7 a.m. to 7 p.m. Monday through Friday. I don't think that this is going to fly. You need to change your schedule. And I played that for a few weeks, trying to string them along. And then eventually they gave me an ultimatum going into my 3rd weekend at that job. And they said, listen, you got to change your schedule with your son in order for you to stay at this company. And I'm like, all right, well, give me until the end of the weekend to figure things out. And that was the weekend where I really took the leap of faith, where I really sat down and I compared the paths that I could take at that point in time. I could stay at that company. I could maybe make, multiple 6 figures a year, up to probably 200,000 a year. Or I could own my own time, be the father that I want to be for my son, and I could build something that really doesn't have limits. And so I looked at it that way, and I compared and contrasted. I literally took a piece of paper, made a table, compared strengths, weaknesses, just mapped it all out, and just brain dumped. And after I did that, I felt very safe and comfortable in taking the plunge and taking the leap of faith and starting my business and going all in on that full time, just because I had nothing to lose. I felt like I had nothing to lose and everything to gain. And I was confident that I could turn it into a win. And so that's what launched ARM5 Formula Company, which now is a 2-time Inc. 5000 company, number 11 in Arizona as of last year. And that's by helping businesses grow and by making smart acquisitions. And we've driven millions in acquired revenue with consistent cash flow and real results, building a multiple 7-figure company, and now have a company qualified to become public later this year on one of the stock exchanges. Okay, so that's my story. And then since then, here has been the milestones and the evolution of my company. So we started as a digital marketing agency, but then we pivoted, and you'll see that in the timelines here. So in 2013, that's when I founded my company, as I went over. And it was founded as a lead ROI-focused digital marketing and business automation agency, laying the groundwork for data-driven strategies. And maybe about 2 years or so into it, maybe a little bit less even, I decided I didn't want to do business automation and create efficiencies for business. Like I love the engineering aspect of mapping things out and figuring out how to create more time through automation for the clients that I had. But I didn't really feel like an excitement about it necessarily. I felt more excited about generating more sales through marketing for businesses. And so I cut that from my service offerings and just laser focused on becoming a marketing agency. And then 2015, from that point on, I achieved top digital marketer certified partner marketing agency status, specializing in digital advertising and also marketing funnels. Did that for a few years, did well, had some great clients. And then in 2019, I developed a specialization in e-commerce and created our proprietary ARM5 formula, which is a marketing and scaling methodology for e-commerce companies centered on customer value optimization for optimal advertising ROI. So basically, I help businesses be able to turn $1 into $5 or $10 consistently through the marketing that we were helping them get in their businesses. We were doing most of the marketing for them. And that's how we created the ARM5 formula. And then going into 2022, I had known for a few years prior to 2022 that I wanted to get out of selling agency services. I was deeply appreciative of the journey and what it taught me and how it helped me grow and how it pushed me to become the best I could be. But I also knew that I couldn't create wealth if I were just to sell services. And I knew I wanted to start owning businesses. And so I made a hard pivot going into 2022. I completely changed my business model, stopped selling services in late 2021, and I officially transitioned in early 2022 into an e-commerce aggregator. And it literally just started by emailing my list and telling them of the direction we were going in and seeing if anybody out there wanted to invest in our next steps. And that's how we got started buying businesses. It's literally how we got started. And so that's what happened in 2022. And then 2024 to present, we are now, as I mentioned before, recognized as a two-time Inc. 5000 company with over 1,000% growth since 2021. And we're now also targeting a much bigger goal than I literally had ever dreamed of 13 years ago. And that's to become a $1 billion market cap company by 2029 through a public listing, strategic acquisitions, and also the integration of powerful agentic AI software for e-commerce. And so, as you know, this is our vision. We want to get to a $1 billion market cap by 2029, which is our ultimate goal for shareholders. Some milestones along the way that are more immediate. We want to get to 50 million in annual revenue by the end of this year. Now, this can be through organic growth and also through acquisitions, especially after we go public. Then we'll have the opportunity to buy much bigger businesses. We're actually already starting to look at bigger businesses even because we already have some public opportunities that we're currently reviewing. So this way, when we're ready to go public, we have acquisitions lined up that we can purchase right away to increase our value right away. And that's how we can get to 20 million in annual revenue by the end of the year. Also, we're going to focus on strategic acquisitions. 1 to 2 companies per quarter has been our mainstay for quite some time now. And we typically buy companies that are doing between 2 million and 10 million in revenue, but we're going to be moving up the chain, as I mentioned, when we have this public vehicle that we're working on. So, very exciting times ahead. We'll be able to increase our top line buy box up to maybe 20, 30, 40. Like right now, for example, we're looking at a company that is doing 20 million a year in revenue, for example. And then also on top of that, our goal right now is to get to a 10 million annual run rate by the end of this month, which this opportunity that I'm going over with you is an opportunity not only for you and to impact your hard-earned dollars, but it's also going to help us get there too, which brings you more value since we're now hitting a higher milestone and increasing our value as well. So it's a win-win on both sides. So our path to a $1 billion market cap by 2029 is driven by building a powerful e-commerce ecosystem anchored by our agentic AI software, creating sticky, recurring revenue and growth opportunities. And also with an experienced team and current success at 1.1 million EBITDA, we are uniquely positioned to deliver exceptional shareholder returns. Okay, and so here are some milestones and some important facts that I want to share with you. So this is contributing to our drive to get to the NASDAQ. So for one, we signed a strategic partnership with directipo.com back in January last year. And so we're working with them hands-on to take ARM5 Formula Company public. And we've been doing it over the last 12 plus months. We almost did it middle of last year. We almost made it to the NASDAQ last year, almost. We barely missed it. But you know what? Everything happens for a reason. And now we have some exciting opportunities ahead of us. And it's also going to be better for our shareholders too, with the current opportunities versus last year's opportunity that almost got us public. So everything happens for a reason. I'm excited for what the rest of this year holds for us. And then number 2, we're going to complete key acquisitions. By the end of this month, for example, we're working on acquiring a top online seller of hyperbaric oxygen therapy products. And this acquisition will add 2.5 million in annual sales and 656,000 in annual net profits, literally right away. And this is how we're going to get to that 10 million annual run rate by the end of this month. And then also on top of that, we're working on ARM5 Formula AI, which is to automate e-commerce operations. We want to launch this by the end of May this year. This is going to be basically a number of AI agents without getting too technical. If you don't know what AI agents are basically automated programs that literally can replace processes and the people that run those processes. And so it's almost like having digital employees essentially. And so we're working on a vision we've got to build out a software that has at least 8 initial AI agents that we've picked out, that we've planned out. So this way we can increase marketing performance, operational performance, decrease overhead costs because we won't need as many people in our ecom brands. And it's going to apply to us and our brands, but it's also going to help other ecom companies too, because we'll let other ecom brands come into our ecosystem and use this software. And this way they can increase their revenues, increase their valuations, decrease their internal costs, and see the benefits of the software that we built. And then finally, number 4 is to get to the NASDAQ. And that's right now targeting mid to late 2026. It's a very dynamic process. I don't know if any of you know how going public works, but I'm happy to share with you any education that I can, because I've been on this journey now for about a year and a half, a little bit over a year and a half, since I decided that I wanted to take my company public. So these moves position us for a July to December 2026 NASDAQ listing. And on top of that, based on the research I've done, and I'm happy to share this research if you'd like to, get access to it. That should put us at an estimated valuation between 80 million to 120 million, maybe even more, possibly. And that means that our shares, because there's 10 million shares in our company, would be worth $8 to $12 per share by hitting this valuation. Okay, so now I'm going to transition here. I'm going to talk about how the ultra wealthy keep private equity quiet, because I feel like that with what I do here at ARM5, with this particular opportunity, with working and serving our investors, and some other stuff that I'm doing, publishing content, for example, I feel like that I'm on a mission to help as many people as possible adopt strategies that the ultra wealthy have been using for decades, even centuries, to build wealth. Because the wealthy don't trade time for money like the average person that has a 9-to-5 job. They trade money for ownership, assets, and also cash flow. And here's the issue, okay? What they teach you is this. Most of society is told to work a job, save what's left, put it in a 401k, and just hope it grows, basically, okay? But, what they do, what the ultra wealthy do is, and we're talking about politicians, billionaires, the financial elite, they quietly invest in private equity, owning real companies before they scale or go public. And they don't advertise this path because it keeps power concentrated. And it keeps them in a position with access, with control. And those exponential returns also stay in their circle. And private equity is where the biggest ROI opportunities exist. If you don't know this already, that's where you can get 20 to 30%, maybe even more annualized returns. There's also tax advantages here, which multiply wealth faster too. And also ownership, not labor, not having a 9-to-5, creates financial freedom. And so I'm going to pop a myth here, possibly with some of you. There is a myth of traditional retirement investing. So for decades, we've been told that stocks and real estate are the safe or best vehicles for retirement and long-term wealth building. While the S&P 500 has averaged around 7% per year long-term, there's growing evidence that this performance may not continue, with rising inflation, unprecedented monetary policy, and major macroeconomic shifts suggest that future returns may fall well short of past decades. And here's the private equity advantage, the case that I'm making here, okay? So savvy investors are increasingly turning to private equity as a strategic lever, having equity in private businesses directly rather than simply owning shares of public companies, like fractional shares. Fractional returns is what that is. So private equity returns since the year 2000 have on average returned 11% per year, okay? Public market returns in that same time frame have done about 7.2% per year on average. We're talking like a 4% difference there. Also, multiples too. Private equity multiples have been 19.9x since 2000, and public market multiples in that same time frame have been 6.6x. We're talking multiples on the returns of your capital, okay? And that's a 3x wealth gap between private and public market investors over the same period of time that I just went over with you. And MSCI Private Capital Solutions reports an even more dramatic 4.86% premium for private equity investments. And so here's why the mega rich, like Warren Buffett here, prefer private ownership. So the Warren Buffett approach is be fearful when others are greedy and greedy when others are fearful. He's basically just saying with this statement that you should always go against the grain and not necessarily follow the norms. Basically, think independently and think, think analytically in a way that isn't just saying, okay, you know what, if other people are telling me that they're doing this, I'm going to do that. No, you want to really go against the current and open yourself up to opportunities. And that's thinking with more abundance also. And now you still need to be subjective and do your due diligence, do your research, all that good stuff. But you don't necessarily just want to rule out something and neglect opportunities, because that's not what Warren Buffett does, and that's not what you should do either. And that's what this statement means. So Buffett's advantage comes from permanent capital, allowing him to practice counter-cyclical investing, buying valuable assets during market downturns when others are forced to sell. And around 40% of family offices are now including private equity as a core asset in their investment strategies, following the ultra-wealthy playbook. And here's how major investment vehicles are performing so far in 2026. And this is a very dynamic financial landscape. So obviously this data changes and shifts from time to time, but this is very recent. Just put this together, just did this research, just put it into this spreadsheet for you. So for example, savings and CDs on average are making about 3 to 4% annually. The risk level is low, liquidity is high, but the outlook is stagnant at this point. And yields for this investment type is tied to the Fed's rates and are unlikely to outpace inflation, which is currently at 3%. So you're really not making any money with saving CDs. Money market funds, you've got 4 to 5% on average annual ROI. Risk level is low, liquidity is high. 2026 plus outlook is modest. There's a solid short-term option here, but it's limited long-term growth potential. Again, with inflation 3%, you're making 1 to 2% per year. Now, bonds and treasuries, you've got 4 to 6%. Risk level is very low. Liquidity is moderate. The outlook is stable. This is reliable for income, but vulnerable to inflation erosion. And then you have real estate, which is arguably the most popular investment. Real estate is about 5 to 8% in annual ROI. Risk level is moderate. Liquidity is low. It's hard to get your money out of your house at times, depending on the market. The outlook right now from this point on is stabilizing, which is good, because I know we've had kind of a rough real estate market the last 18, 24 months even. And the market's moderating right now, and high interest rates continue, though, to impact affordability. And then you have the stock market, which is the S&P 500, for example. The average annual ROI is about 8 to 12%, so definitely better than real estate. The risk level is moderate. The liquidity is high. You could sell your stock, using any app, or if you're working with a financial advisor, for example. However, right now, the outlook is volatile with everything happening in society, in the economy, and growth subject to economic data and corporate earnings at this point is how the stock market looks. And then you have crypto, Bitcoin, altcoins. The average annual ROI is 20 to 50%, so which is large. It's massive, but it's volatile. Risk level is very, very high. Liquidity is high. It's just like the stock market. You could sell your crypto on a crypto exchange very quickly, very easily. The 2026 plus outlook is high risk. And there's regulatory clarity improving, but extreme price swings still persist. And then you have private equity, and we're going to focus on e-commerce, in this presentation today. The average annual ROI is about 25 to 50%, maybe even more. The risk level is moderate. The liquidity is also moderate. The 2026 plus outlook is expanding currently. You have high growth, tangible cash flowing assets here with strong deal flow. So while traditional assets face headwinds, Private equity, particularly in the e-commerce sector, stands out for its high growth potential and tangible cash flowing assets, offering a compelling alternative for savvy investors. And so the sweet spot, and this is, Tony Robbins and Ray Dalio and a number of other experts on building wealth. This is what they recommend. They recommend that you put in 5 to 15%. I even know some people that speak to putting in up to 20% even into private businesses, private equity. Okay. And the reason why is because, for one, you have better returns. Putting 5 to 15% plus of your money into private businesses can make your investments grow faster over time. Also, it allows you to spread out your risk. Private businesses don't always follow the stock market. This means they can help spread out your risk, especially when other investments are struggling. This is basically an uncorrelated investment asset, investing privately instead of publicly, or versus real estate, which is based on the Fed, for example. And then you also have more control. Again, uncorrelated assets. That's what private businesses are, and that's what private equity investing is as well. Owning a part of a private business gives you more control. The money it makes keeps coming in, even if the stock market, like the S&P 500 or real estate market, goes down, as I mentioned. So the smart way of investing helps you get the big benefits of owning private businesses. At the same time, it keeps your money available and spread out across your total investments. So I'm going to highlight, one of the personas that this is for, which, as I mentioned at the beginning, the strategic investor. So this is for the discerning investor seeking opportunities beyond traditional markets. Our private equity strategy offers a compelling pathway to outsized returns and strategic growth. For one, it's going to outperform public markets. You'll be able to leverage private equity's proven track record of historically superior returns compared to public market indexes. And then you also have early stage advantage. You get to gain entry here into a high growth wellness brand before its major valuation expansion phase. Also, you get an opportunity in an AI and wellness synergistic opportunity. You'll be able to invest in the powerful combination of artificial intelligence and the rapidly expanding wellness economy for significant multiple expansion potential. And then also on top of that too, you have a structured liquidity path, which you'll learn more about later in the presentation. You'll be able to benefit from a clear structured conversion into public shares prior to a major liquidity event, which we're planning, as I mentioned, here towards the end of 2026. And e-commerce is still growing. If you've done research on e-commerce, you'll see that e-commerce is growing, showing no signs of slowing down. It's expected to be a $7.9 trillion market by next year, 2027. And there's a number of reasons for that. I mean, for one, it's always open. E-commerce businesses operate around the clock. In my opinion, these types of businesses are way superior to invest into versus like a brick and mortar. Brick and mortar businesses, while they seem like they're safe, how safe are they really when you have robotics, when you have AI, when you also have rising real estate costs? And also on top of that too, boring quote unquote businesses, they don't get massive multiples when it comes to you selling versus e-commerce, where you can get some pretty significant multiples. And I literally just got an update on multiples on Monday when I was in New York City at an e-commerce acquirer event, learning how the market is now buying e-commerce businesses over the last 12 months, for example. So e-commerce is the way to go when it comes to buying businesses, investing into businesses versus other business types. I used to say SaaS was also one of those, but unfortunately, SaaS is now being pummeled, being destroyed, you could say, through AI, because now you have vibe coding, you have people popping up softwares very quickly, very easily. And so the value of SaaS companies is decreasing right now. And so that's a very risky play too. But e-commerce, it's actually benefiting from what's happening right now, because e-commerce is a digital business model. It's very correlated with AI and agentic AI. It's set to take advantage of AI and how AI can impact businesses. So it's a match made in heaven, basically, e-commerce and AI. And people right now are buying online more than ever before. And I'm sure you can attest to that, because if you look at your Amazon, I'm sure you're buying a bunch of products every single week from Amazon, for example. So as I mentioned, e-commerce is exploding. All right. So I'm going to compare real quick brick and mortar real estate franchises and e-commerce. So this way you can, again, have some additional data points here to really learn more about investing into e-commerce. So for one, you've got brick and mortar, and I kind of highlighted this a little bit as I unpacked the previous slide. So the typical yearly ROI of investing into a brick and mortar is about 8 to 12%. You have moderate control, you have low liquidity. The risk level is high though, because you have location, you have overhead costs, scalability too. The ability for a business to grow is limited with a brick and mortar because you're limited by geography, you're limited by space also. And the cash flow potential is slow and seasonal typically in a brick and mortar business. And then you have real estate. We highlighted this a bit. 7 to 10% typical yearly ROI. You have low control, you have moderate liquidity, you have a moderate risk level. The scalability is really market dependent. It's really not based off of like you operating a business, for example. And the cash flow potential is predictable, but it's also capped. And then you have franchises. Now, franchises, a typical yearly ROI is about 12 to 18%. Control is low, liquidity is low, risk level is moderate, scalability is a limited autonomy. And the cash flow potential it's consistent, but fees cut profits because you have to pay the franchisor above you. And also you don't have as much control because again, you have to report to the franchisor and you have to follow whatever rules, regulations, processes, etc., that they mandate with any franchisees. And then when you've got e-commerce. So e-commerce, the typical yearly ROI is about 20 to 40% or more even. You have high control. Liquidity is high because it's a digital asset. Also, the risk level is lower because you have lower overhead. You don't have a brick and mortar. You don't have expensive US employees even. And then you also have AI and the use of AI reducing costs even further right now. Scalability is global. There's infinite scalability, really. And then also on top of that, because of what I just said, the cash flow potential is reoccurring and also compounding as well. So e-commerce combines the agility of digital technology with the profitability of global reach. You can scale from local to worldwide without additional real estate or staff. You can automate nearly every process in an e-commerce business, and it's growing with AI. And you could build a sellable digital asset that compounds in value. So smart money isn't just looking for cash flow, it's looking for scalable, tech-enabled businesses that multiply returns. And we're also talking too today about more than just e-commerce. We're talking about a rapidly growing wellness economy. The global wellness economy is experiencing unprecedented growth currently, consistently outpacing general economic indicators. And this expansion is driven by a heightened consumer focus on health, prevention, and longevity, positioning it as a prime sector for investment. Okay, so you can see here that currently the wellness economy this is as of 2024, and obviously we have all stats all the way up to the projection of 2030. In 2024, the wellness economy was valued at 5.6 trillion. And by 2027, it's expected to reach a astounding 8.5 trillion, which is a remarkable 9.9% annual growth that far outpaces global GDP. So for discerning investors, this represents a pivotal moment. The health and longevity economy is not merely a trend, but the next major tech wave, while burgeoning consumer demand converges with cutting-edge science-backed innovation. It's simply this. In the next 5-10 years, when we have AI, we have robotics, people are going to continue to invest in their health. They're going to continue to invest in buying back their time because they want to live the longest life possible. And that's why this is a growing wellness economy, because tomorrow, when you have all this time on your hands, you want to maximize that time with health. And you also want to live the longest life you could possibly live. And right now, the wellness economy is booming because of all those different factors. And so here's why, and I kind of led into this a bit, why consumers are spending differently. Consumers are fundamentally reshaping their priorities, moving away from traditional consumption towards investments in personal well-being. And this shift isn't just a trend, it's a deep-seated behavioral change. For example, you have proactive wellness people have a strong preference right now for preventive wellness over reactive medicine, and that's driving spending. Consumers are investing in health solutions before problems arise. You also have enhanced living. The pursuit of daily biohacking, recovery, and longevity tracking, like a watch, for example, is becoming mainstream. It has been becoming mainstream. Individuals are actively seeking ways to optimize their physical and mental performance. And you also have a value shift. An impressive 77% of consumers now prioritize well-being spending over traditional material goods, reflecting a deep-seated commitment to holistic health. And so for investors, this signals a crucial insight that the market isn't merely growing, it's undergoing a structural transformation. Longevity, vitality, and performance are no longer niche interests, but premium categories commanding significant consumer investment. And here's what hyperbaric oxygen therapy is and how it works. Raise your hand if you know already about hyperbaric oxygen therapy. Raise your hand if you're already familiar with this tech. So give me a hand raise here in the comments if you are. And I'm going to take a sip of water and then we'll continue here. Okay, let me know. Raise your hand. All right, thank you. Appreciate it. Okay, awesome. Awesome. Thank you so much. Appreciate it. Okay, looks like there are some people familiar with, hyperbaric oxygen therapy. Great. Okay, perfect. Okay, good. All right, so hyperbaric oxygen therapy is a cutting-edge medical treatment where individuals breathe pure oxygen in a pressurized environment. And this process allows the body to absorb significantly more oxygen, promoting natural healing and recovery at a cellular level. So for one, you get to breathe pure oxygen, inhaling nearly 100% pure oxygen, unlike the 21%, yes, 21% found in normal air. It's also a pressurized chamber. Under pressure, this typically is a 2 to 3 times greater impact versus atmospheric pressure, allowing deeper oxygen absorption. You also have enhanced oxygen delivery. Blood plasma carries this enriched oxygen to every tissue in the body, even those with impaired blood flow. And if you're trying to, repair an injured area, the body is a, incredible machine basically, and blood flows to the areas where it's needed. And so when you use this, that blood is much more powerful in healing areas of the body as the body works to heal itself. And that leads me to my final point here: accelerated healing. The body's natural healing mechanisms are significantly boosted, aiding recovery and also regeneration. And so here's how hyperbaric oxygen therapy helps your body. So number one, it dramatically increases oxygen delivery. It allows you to breathe 100% pure oxygen in a pressurized chamber, which allows the lungs to dissolve significantly more oxygen into the blood. And this enhanced delivery reaches tissues and organs, even those with impaired blood flow. Number two, it supports healing and tissue repair as well. I'm going to call it HBOT for short from this point on. So HBOT provides essential oxygen for cellular energy and healing. It accelerates recovery of injured tissues, promotes new blood vessel growth, and stimulates cellular regeneration, enhancing the body's repair capacity. It also enhances immune function and infection control. High oxygen levels boost white blood cell effectiveness and help resist harmful bacteria. So HBOT supports infection control and also antimicrobial activity, especially in oxygen poor wounds. It reduces swelling, inflammation. If you're a intense athlete and you work out really hard, then it's going to help you reduce swelling and inflammation, because the increased oxygen and pressure, they help reduce edema and also inflammation, which accelerates recovery from injury and also trauma. And then finally, there's broad physiological benefits. HBOT enhances circulation, boosts stem cell mobilization, and supports regenerative processes, aiding overall recovery and medically approved treatments as well. And there's been like a shift towards home-based devices. The wellness industry is undergoing a significant transformation and has been for quite some time, with high-end specialized treatments increasingly moving from clinics to convenient home-based solutions. And this decentralization of wellness empowers consumers and creates new market opportunities. And I can testify on that. I've got red light therapy, I've got a cold plunge, I've got a sauna. I mean, I've got it all. So for those that can afford it, we're bringing it in-house. For those that can't, they're going to the clinics, and the clinics are buying these, units and products, and they're, using that as a service opportunity to serve clients. So either way, this business wins with two different directions it can offer value. So the president is wellness is moving home. Peloton, for example, redefined home fitness, disrupting traditional gyms, especially back during COVID. And red light therapy devices migrated from spas to personal use is another example. Cold plunges also, once for elite athletes, are now available for home. Like I said, I have one downstairs right outside. And the opportunity for HBOT at home is there's a growing demand for soft shell home hyperbaric chambers. There's also a development of consumer accessible HBOT systems. And there's also an integration of at-home optimization tools for personalized wellness. And this is only evolving too. So this powerful trend simultaneously drives demand for both specialized clinic services and accessible consumer devices, expanding the market rather than cannibalizing it. Investors gain exposure to a dual growth trajectory. So there's a high margin recurring revenue model here for clinics that this company, this brand already takes advantage of. So for clinics, Hyperbaric Oxygen Therapy offers a highly attractive business model characterized by significant revenue potential and patient loyalty as well. This makes HBOT not just a treatment, but a strategic investment for healthcare providers. And there's a few reasons why for that. So number one, you have a high per session pricing. Sessions typically range from about $150 to $300, maybe even more, allowing for substantial revenue generation per client visit. Also, there's package-based selling. Clinics can offer 10 to 40 session packages, securing upfront revenue and ensuring consistent patient engagement as well. And there's also strong patient retention. The multi-session nature of HBOT and positive patient outcomes lead to high retention rates and also repeat business. You can't just use an HBOT chamber once and get the results. You have to use it pretty consistently for a period of time to get the result that you want, for example. Also, there's lucrative add-on upsells. HBOT services naturally complement and drive demand for high-margin add-on therapies like IV drips and even peptides. So this robust clinic demand for profitable HBOT services directly translates into increased B2B equipment purchases, solidifying the market for home-based and clinical HBOT devices. Okay, so in summary, here's a slide showing you the market opportunity by application. So you have number one, brain health and cognitive performance. You have post-concussion recovery programs. You have cognitive optimization and longevity clinics. You have an aging population seeking brain performance support. And then you also have sports recovery and performance optimization. You have an accelerated recovery from intense training when you use this. You have reduced inflammation and swelling. You also have performance longevity for elite and amateur athletes even. You also have chronic wound and diabetic ulcer treatment. Rising diabetes is right now happening globally, and there's also an aging population. And then also on top of that, insurance reimbursement pathways to be able to take advantage of using these products in clinics. And then also on top of that, you have post-surgical and clinical recovery. You have increased elective procedures. You have integrative oncology support services. And then you have higher patient willingness to pay for optimized recovery. And then you also have longevity and preventive wellness as well. You have preventive health mindsets that people have that causes them to want to purchase these products or go to clinics and use these products. You have a biohacking and anti-aging culture right now that's growing and trending, especially with, like I said before, with society just changing and jobs expected to disappear and us to have more time on our hands where we care about our health, we care about living our best life. We also care about longevity as well. And you have high-income consumers too seeking cellular optimization as well. So what is this company that you can invest into? Well, I can't give you the name just because we do have an NDA where we can't give out the name. But if you do decide to move forward to do due diligence and meet with us, we can give you the name. That's fine. We just can't do it in a webinar format, unfortunately. But this company is founded in 2019, and this company supplies premium hyperbaric oxygen chambers to clinics, wellness centers, recovery facilities, and also high-end at-home users. It operates as a full-service equipment provider offering consultation, delivery, so sales and delivery, installation even, and also ongoing support too. And with a broad product range spanning soft shell consumer units to clinical grade hard chambers, the company serves both medical and performance-driven markets, capitalizing on growing demand for oxygen-based therapy across wellness, longevity, and recovery sectors. And some of the core differentiators of this company is they have a full service model, including consultation, installation, and training, as I mentioned. They also have a broad product range serving both clinical and also at-home markets. They're positioned within high-growth wellness and recovery segments, and they have turnkey solution they're turnkey solution providers, what I meant to say, rather than just an equipment reseller. So it's, they help people get the transformation from A to Z, basically. They're not just selling the product. They're doing the consultation, they're doing the installation, they're doing the sales process, and they're also doing ongoing training as well. And here's a financial snapshot of this company too. It's already profitable. It's already set to scale as well. Over the last 12 months, this company has generated approximately 2.5 million in sales in gross revenue and 656,000 in net profit, demonstrating exceptional margins. It's already averaging about 55, I'm rounding up just a little, 55,000 per month in profit. That's the adjusted EBITDA per month. It already has a 25% EBITDA margin as well, and it has no debt. There's no debt attached to this business, so it's fully self-funded up to this point, and it's ready to be scaled. And here are just some growth drivers and strategic initiatives that we already see in this business, and there's a limitless amount of opportunities for us to grow this business, but this is just some of them that we see right away. So for one, we see digital marketing expansion. We see the opportunity to scale performance marketing across Google and Facebook platforms. Baseline projections target net revenue growth from 208,000 per month to over 500,000 per month by 2028, and that's reflecting worldwide expansion efforts. See, with e-commerce, to get people to come to your store, it's literally just going to a traffic store and buying more traffic. That's what Facebook is. That's what Google is. And there's other companies like TikTok, for example, that are just traffic stores for e-commerce businesses. And that's one of the reasons why e-commerce businesses are superior for investing versus other types of businesses, because e-commerce is super scalable. You can just get more traffic, buy traffic from the traffic stores. And as long as you know what you're doing, then you could see your business grow very, very fast. Also, we want to launch a reoccurring revenue membership. We see a massive opportunity here in this company, especially with our portfolio of health and also beauty brands that are super complementary to this company. We can create a longevity club, which is a premium membership for hyperbaric chamber owners that provides expert protocols, training, community support, and also exclusive resources to help them maximize the health benefits and performance of their hyperbaric therapy. Also, we see the opportunity for international expansion. We can leverage our strong global connections in our other companies, which we have connections in Europe, in Canada, in Australia, to accelerate penetration in key markets around the world very quickly, because we already have the vendor relationships. We already have even the audiences in those markets too that we can tap into. So we're set to expand this company's sales and customer base internationally very, very quickly already. And we have some other opportunities too. We have cross-selling and portfolio synergy. I kind of went over that slightly in what I just said. We can integrate this company with complementary sleep, red light therapy, and also wellness brands to create comprehensive recovery bundles. We will cross-market this company's products consistently to share marketing and customer bases we already have, dramatically increasing customer acquisition, revenue generation, lifetime value, and also profits. We can also scale up an ambassador and also influencer program. We already have that in some of our companies, and we can now add more value to them by asking them to represent this brand and this brand's products too. And we can continue to grow that. We can partner with elite athletes, license physiotherapists, wellness influencers, and educate consumers on hyperbaric oxygen chamber therapy benefits through these relationships. And we can also leverage credible voices by doing this to build brand authority and drive organic adoption across key demographic segments. And then also on top of that, we can also take advantage of AEO, which is answer engine optimization, and GEO, which is geographical engine optimization as well, which is basically the new search engine optimization. So if you're not familiar with those terms, basically when you use Google, that's search engines, and businesses optimize to rank on Google, so this way you find them. People that is now shifting over to ranking for generative AI, for ChatGPT, for Gemini, and having your businesses rank in those AI engines. So this way, when you search for, what's the best hyperbaric chamber company out there, this company shows up, for example. So we're strategically investing right now into answer engine optimization and generative engine optimization to position all brands in-house at the top of AI-driven discovery platforms like ChatGPT, Gemini, and Perplexity while it's still early. And by ranking now in generative search and recommendation engines, we're capturing visibility, authority, and investor attention ahead of the next digital gold rush. So each of these growth drivers has been validated through market testing and is supported by detailed implementation roadmaps that we already have in-house. And the combination of these initiatives creates multiple paths to accelerated revenue growth while maintaining strong unit economics and profitability as well. Okay, so this is going to be the exciting part. So you definitely want to pay attention to this, because this is going to break down basically step by step how you can turn $100,000, for example, and that's not the minimum, but $100,000, for example, into potentially up to $500,000, maybe even more in value by the end of this year. And that's through monthly profit share, early stage equity conversion into ARM5 formula company, and participation in our public listing strategies. There's 5 steps here. There's invest, earn, convert, grow, and liquidity. Okay, and now this is for the retiree. It's for the strategic investor, as I highlighted, but it's also for the retiree, and it's also for the working professional, which I'll go over here in a few slides as well. So this investment offers a unique opportunity for retirees seeking both stability and growth, designed to enhance financial security and provide consistent income streams. So for one, you get monthly profit share. A lot of times retirees are looking for additional cash flow opportunities, additional income sources, and they'll be able to benefit from immediate predictable cash flow to supplement their retirement income with this opportunity. Also, this is an opportunity for growth with no operating risk. You'll gain exposure to a rapidly expanding market without the burdens of direct business management, because we're handling all the heavy lifting. And then also you have a non-market correlated opportunity here. You'll be able to diversify your portfolio with an income stream less tied to volatile public markets, which is important. And I believe everybody, no matter if they're a retiree or a younger investor, I believe everybody needs to have investments that are non-correlated. And then also on top of that too, there's a public market upside here. This is a big opportunity. This is the opportunity to participate in the long-term appreciation and liquidity potential of a future NASDAQ listing as well. Okay, so step one is you get immediate monthly cash flow. So you've got the initial investment is new investors can join with a minimum of $25,000, becoming a key part of this company and also ARM5's growth trajectory. This gets you monthly profit share. Each investor receives up to 40% of the company's net profits monthly. And that's based on their investment, just so you know. So you don't get 40% if you invest 25K, just so you know. But there is 40% of the profits available depending on the level of your investment. And that's directly reflecting the company's real operational performance. And then also on top of that, you get a predictable yield. Monthly deposits are projected to continue through approximately May to July this year, ensuring a steady and predictable cash flow from this investment from now until then. So for example, a $100,000 investment generating 6% in monthly profit share could yield approximately $2,000 to $4,000 each month based on our projections, totaling up to $8,000 over a 4-month period. So you earn while you wait for us to go to the next stage and give you opportunities to have stock in a company before it goes public. So this is real operational profits. This isn't just paper gains like owning a stock. This is real cash flow being wired to you every single month. And then step two here, is conversion into ARM5 shares before our NASDAQ listing. And let me also just state this as well. This is literally the last round to take advantage of this. Future investment opportunities as we raise capital to buy additional businesses to increase our value before we go public will be a different investment mechanism. We're moving towards a safe investment. That's what that's called. So this is a much more favorable opportunity, but it's also a timely opportunity too. So you definitely want to act on this while you have this opportunity. So this way you don't miss out on it. But this graph here shows you the projections of if you were to invest, for example, 100,000, and what the ROI is projected to be by the end of this year, also by the end of next year, and also the end of 2028, as you can see here. And it's also, there's 3 different tables because we're showing you kind of good, better, best, 8x, 12x, 20x, based on the strategic plan that we're executing on and based on the research that we've done that shows that our plan could yield an 8x to a 20x, maybe even more possibly, just because it's really tied to agentic AI. That's why agentic AI is super hot right now. And the public markets are responding very, very well to agentic AI companies. And that's why agentic AI enabled companies like an agentic AI e-com aggregator like this one could do very, very well in the public markets when it registers and goes public. And so that's where this is coming from, just so you know. And there's lots of research, happy to share it with you, that back this up as well. And so basically this projection shows that a $100,000 investment could be worth, by the end of this year alone, could be worth 2x to 5x. Okay, that's what this graph shows. And that's just by the end of this year. Beyond that, it could be by the end of next year, it could be worth 1,230% all the way up to 3,000%. And then it goes astronomical after that because it's basically projecting us hitting our billion-dollar market cap goal. And that's why you see such phenomenal ROI multiples by the end of 2028 in this graph. Okay, so you have an early conversion advantage here with this opportunity. You get to lock in today's price before tomorrow's valuation. Now, let me explain what that means. So number one, this is a strategic conversion point coming up. So around May to July, approximately, is when all investors on this offer will convert their full investment plus any bonuses that they get into ARM5 Formula Company stock. And that's before we go public. We're going to convert you into stock as we can participate in the upcoming listing. And then this way you could benefit from the immediate gains and the long-term gains as well. And then number two, you're also getting a pre-public valuation lock by acting now, not tomorrow, but acting now. So today, for example, you'll be able to lock in a $20 million pre-money valuation on the conversion of your investment into shares. And that means that later this year, when we list for 40, 80 or more million in value, you don't have to worry about converting into that valuation. You invested here and now, and because of that, you get to convert at a 20 million valuation, which is obviously a favorable opportunity to have. So that means that the foundational share price here, investors are effectively receiving shares at $2 each before the public listing. So you're getting shares at $2 when we convert you. Whereas when we list, we're projected to hit somewhere in between 60, 80, 120, maybe even more million, which means that the shares at that point in time could be worth $8 to $12 or more per share. And, I'll let you do the math and, you can see that this is a pretty significant opportunity for you. Now, this is the last persona that this is for. I already went over the other personas. This is also for the working professional. This investment offers an unprecedented opportunity for working professionals to strategically convert active income into long-term wealth, aligning with future market trends and significant liquidity events that we have planned. So for one, you'll be able to convert active income into equity, which strategically transforms your current earnings into valuable long-term assets, building a robust investment portfolio. You'll get exposure to AI multiple expansion in the future as well. You'll be able to position yourself to capitalize on the exponential growth potential driven by cutting-edge AI advancements in wellness technology and e-commerce. You also get to participate in IPO level upside, which is rare. Typically, you have to be part of a family office, or you have to be a part of a private equity group. Again, this is an opportunity that you don't get to see every single day. And then on top of that too, you'll have asset ownership beyond just the W-2 income, which everybody needs this. You can't just, if you're a working professional, you can't expect to build wealth if you don't make moves like this, in my opinion. So you'll be able to build a diversified asset portfolio that extends beyond traditional employment earnings, fostering true financial independence. Okay, so back to the steps. So step 3 is public listing to liquidity and long-term growth. So this is how early ownership in innovation compounds into long-term wealth. So as I mentioned before, we're targeting a NASDAQ listing between July and December this year. And we're also targeting an 80 million to 120 million, maybe even more valuation when we enter into the public markets. Now, following a 6-month lockout period post-listing, because we don't want people dumping shares, decreasing the value of the company, impacting other investors, investors will gain the flexibility to liquidate a portion of their shares, realizing initial returns. And then as we scale and grow, as you know, we have a $1 billion market cap target by the end of 2029. This growth plan will get our stock and our shares to $100 or more per share over the next several years. Okay. And as I mentioned before, this is a research-backed valuation. These are actually very grounded targets. And again, if you want to access this research, happy to give it to you, totally fine. Our valuation targets are not hype. They're modeled from real software and AI market multiples and performance expectations. For example, you have some key market benchmarks here, and this is 2025, late 2025 data. Public SaaS companies get about 6x of revenue. Private software M&A is typically about 4.8x, and AI companies fetch between 15 and 24x revenue multiples, though, due to high growth and data moats. And so ARM5 projection is about this. So we have a conservative projection of 6x of revenue, which is 60 million, but a moderate growth premium is anywhere between 8x to 12x. So that's between 80 million to 120 million, which is our expected range based on the research and the plan that we have that we're executing on. The AI premium, though, could add even more to this, could get us up to a 15 to 20x based on the research we've done, which would put us at 150 million or more in value. And there could be an opportunity to get an even higher valuation up to a 20 plus, which would put us at a 200 million dollar valuation. So there's some big opportunities here that we're tapping into that you can also be a part of. So with that said, I invite you to join us in illuminating the future. We've got an opportunity here. This is already a company that's proven, it's profitable. It's doing 656,000 in EBITDA and profit with 25% margins and no debt attached. As you learned today as well, there's market tailwinds. We're riding with this company a 5.8 to 7.8% cumulative annual growth rate in the hyperbaric chamber therapy market. It's a growing market, great market to be an investor into. Also, there's portfolio synergies here. This is a smart acquisition play by us. And ultimately, you're not just investing in this company, you're really investing in us. And this is a very smart acquisition that you can be a part of, and you can be a part of the entire portfolio. And it fits in very well because we focus on buying and assembling health and beauty brands, and we already have health and beauty brands. And then on top of that too, as you just learned, there's compelling potential returns by the end of this year alone. Investors will have profit share allocations over the next several months where you get profit share payments every single month. And then you'll be able to convert your investment into shares of ARM5 Formula Company ahead of launching in the public markets. But you'll be doing it at a very favorable valuation, which is today's 20 million pre-money valuation, not the projected 30 or 40 or 60 or 80 or 120 million valuation of tomorrow. So here's the investment opportunity, and here's some terms and bonuses that are very important for you to know. So for one, in every single subscription agreement, that's what the investment agreement is called, there's downside protection. You'll see that when you review the agreement. So to align incentives and reduce your risk, this offering includes a structured performance protection feature If the investment does not achieve a 2x return within 36 months, ARM5 intends to implement protective measures as outlined in the offering documents, which may include capital return provisions or restructuring mechanisms. So all terms are subject to the official subscription agreement and applicable securities regulations. Also, we are offering currently a up to 25% investment bonus if this is finalized by March 27th. And it's tied to the timing of us buying this company. Okay. Because you scratch our back, we scratch your back, basically. You help us, we help you. And so the following bonuses are available for new investments into ARM5 Formula Company. So if you make an investment between 50,000 to 99,000, you'll get a 5% bonus on your money. If you make an investment of 100,000 to 299,000, you'll get a 10% bonus. If you make an investment of 300,000 or more, we give you a 25% bonus. So for example, an investor contributing 50,000 will effectively secure a $52,000 500 equity position, reflecting the 5% bonus added to their investment. And this enhanced valuation will carry forward when converting to ARM5 Formula Company shares. So we're going to give you more shares for free, basically, prior to our public market launch. And it's at that 20 million pre-money favorable valuation. So this bonus helps you whether you invest 50 or whether you invest 300,000 or more. That's obviously an even greater impact to the potential ROI that you can get from your hard-earned capital. Okay, so if you're interested in reserving an allocation, we have 550,000 left in a round of 675,000. All you have to do is just pop out your phone, scan this QR code. It'll take you to a page where you can book a time with me directly, and then we can discuss this opportunity. I can answer any questions you have. We can go over anything that you want to see, any research, any due diligence, any reports, you name it. Nothing's off the table. But this way you can be a part of this. We'd love to have you. We'd love to serve you. And this is an exciting opportunity, as I just went over today. So go ahead, scan this QR code, get on my calendar, get into this opportunity before it closes. It's a first come, first serve opportunity. Or if you want, you could just go to arm5formula.com/call. It'll take you to the same page. You could book a time there, whatever's easiest for you. And again, this is first come, first serve. We have up to 12 spots. Some of these spots are already taken, but this is an opportunity for you to secure this investment opportunity, and you can start building wealth in e-commerce, in private equity, which, as you learned today, is a very smart play. And I highly recommend that you have private equity in your investment portfolio, and you can't do much better than investing into e-commerce. So I'm going to go ahead and stop right there, get some water, and answer any questions you guys have. So if you have any questions at all from this presentation, put them in the comments. Let me know what your question is, and let's go over it one by one. All right. Hydrated now. All right. What questions you guys have for me? Let me know here in the comments. Let me know what questions you have for me. Okay, great question just came in. Thank you, Asher, for the question. I appreciate you being here too. His question is, what protections are you putting in place with regards to HBOT safety and liability? Now, that's a great question. So this company already has a really solid process for protecting themselves with their clients, on the B2B side, or with their customers when customers order these products too from their website. And of course, they go down, they install it. They don't expect the customer to install it. So they already have an agreement process that protects their liabilities that we'll just continue to do. So that's how we're going to be tackling HBOT safety and liability. So thank you, Asher, for that question. Great question. And keep them coming. If you have other questions, put them in the comments. And for everybody else, don't be shy. The best thing you can do is ask questions. Just like being a student in class, the more you put in is means the more you get out. So put your questions in the comments. All right, guys, don't be shy. Put your questions in the comments. I've got another few minutes here to answer any questions you guys have. I can stay on a little bit longer if I need to too as well. But just let me know what questions you have. Just throw them in the comments. Get your questions answered. All right, last call for questions. Going once, going twice. All right, all right. All right, guys. Well, thank you so much for joining me live. And if you're catching the replay, thank you for spending time on this replay. If you have any questions, reach out to us. Best thing to do is just to book a call, find out more. You're not committing anything by booking a call. You're literally just saying, hey, I'm raising my hand. I am interested. I want to connect. I want to find out more. So book a call now. Get in on this opportunity. It's a very exciting opportunity. You could be a part of something that we're building. It's very special with a big upside that we're planning over the next 12 months alone. We'd love for you to be a part of this. So I look forward to meeting with you, serving you, and helping you turn your hard-earned capital into capital that works harder for you. So thank you so much. And I look forward to seeing you guys on the next webinar.